Hi again everyone and Happy New Year. I hope you have all had a great festive season and New Year period and are feeling refreshed and ready to get back into the swing of things for 2022. To start the year and get my channel back on track, I have decided to give fans of Block stock, formerly known as Square, a late Christmas present and show you how you can buy the stock at a discount. This is excellent for anyone who is looking to hold Block for the long term. Personally, I think it's a great time to be holding this company as they are doing some exciting things in the areas of crypto and online payments, and I have a further vote in confidence in the company now that Jack Dorsey has left his CEO role at Twitter to solely focus on his activities at Block. So in this video, I'm going to quickly show you how to buy Block at a discount and cover some of the important considerations that come with this method. So let's get into it. So firstly, to understand this discounted method, you need to be aware that Block is acquiring Australian digital payments company Afterpay in an all-stock deal. Basically, if you hold Afterpay stock on the yet-to-be-released record date, these shares will be transferred into Block stock. This record date is expected to be at some point in the first quarter of this year. This technical merger has now been given permission by the New South Wales Supreme Court to go ahead and is now waiting for a final ruling from the Bank of Spain to finalise the process, which will also be when the final record date will likely be set. Anyway, in the deal, every Afterpay share owned will be converted into Block stock either on the US exchange or a newly created Australian listing being called, at the moment, New Square, should be New Block. The way Afterpay owners receive their stock is based on the brokerage services of the shareholder and whether they can hold US shares or not through that service. The exchange rate is 0.375 Block shares for every Afterpay share held. So the way you receive the discount is buying Afterpay shares and holding them until they convert to Block and taking advantage of the current margin of discount that is existing between the two companies' stock prices when you consider the exchange ratio of the two shares. So based on the conversion rate at the current raw foreign exchange rates, you would receive a 61-cent discount per share in Block if you were to buy Afterpay now based on the closing prices of both companies on 2021's last day of trade. Now 61 cents is something, but I suppose it is not that exciting when you consider it in relation to the Square share price. It represents less than a 1% discount after all. However, you need to remember that there is a time difference between the two markets. Because Afterpay is effectively becoming Block, Afterpay's share price generally follows the trend of Block in the next trading session. So because Block fell by 2.32% on Friday, a similar move down should be expected during the next session that Afterpay trades, to more or less align the share price with the movement of Block. Keep in mind, however, that Block will trade for another session before Afterpay opens due to the ASX being closed on Monday the 3rd, as Australia observes the New Year's Eve public holiday on that day. But I digress. If you look at the past month of trading, we can see that there is very similar price trends occurring between the two companies' share price, albeit a day later for Afterpay. This can be further seen by the fact that they both fell similar figures in December, with Block falling by about 16%, and Afterpay by about 17%, which I think further establishes the link between the two share prices and reinforces the idea that currently Afterpay is likely to fall when it next trades, unless of course Square is to have a strong corrective price action on Monday. One more thing I want to point out that is making this trade perhaps more appealing is that both companies are priced at near 52-week lows. So if you're a believer in the future of Block, this is potentially a good entry point for this stock. So to understand the discount you are more likely to achieve on Block with Afterpay, it is perhaps better worth considering where Block was trading before opening on the 31st of December, as Afterpay stock has not yet had the opportunity to react to the price movements of Block stock. So when you consider the SQ stock was at $164.02 at the start of Friday, buying Afterpay stock would have given you a $3.12 discount per share, saving you roughly about 2%. So it is significantly more than the 61 cents that it is currently showing. Now, I have been following this trade for several months now because I do already hold both stocks and have seen this level of discount hit over $10 a share before. However, now that the merger seems very much inevitable and the expected record date draws nearer, the discount has generally shrunk between the two companies. However, you would have been feeling quite burnt had you bought into either of these two companies a little bit earlier, as both have experienced significant drops in share value, which does very much reflect that wider tech drop that has occurred in recent months. To put that into further perspective, as mentioned previously, both companies finished 2021 at near 52-week lows. So there is potential to buy a company that is at a low price point for a further discount with this trade, if you do believe it is a company worth holding on to, that is. Now, just some other considerations before we finish up. As I said earlier, it is worth noting that the ASX is going to be closed on Monday the 3rd of January as Australia observes the New Year's Day public holiday. And from what I gather, America does not, which means you won't be able to execute on this trade then, and the level of discount available will again change. So you need to keep an eye on the price action. Like I said before, the implementation of this merger is likely to happen in Q1 of 2022. However, the final date is still pending a decision from the Bank of Spain. While it is very much likely to go ahead, there is still a slim chance that this merger may be stopped. I suppose that is part of the risk that is being priced into this move and maybe reflected in that discount that we're talking about. It is also important to consider what effect foreign exchange fees and rates will have on this trade. Getting this discount is all well and good, but if your trading platform or foreign exchange platform takes a big bite out of your money in exchange fees, it may not really be worth following this trade. Finally, you need to ask yourself, do you want to hold shares on multiple exchanges and potentially in multiple currencies? So there's a bit of personal preference there. It is also worth pointing out that when the final record date for the merger is made and that record date approaches, the potential discount on the margin is likely to further reduce, as it has slowly done so over the past 6 months. So it's kind of like a ship sailing away and you're trying to jump onto it. Anyway, that's it for this one. What do you guys think about Block as a company and as a longer term prospect in your portfolio? Do you currently hold it? Let me know your thoughts in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.